If you've been having problems trading and staying consistent over a long period of time, it may be due to you not being able to adapt to certain market conditions. Today, we're going to fix that problem. What's up, you guys? It's Keith from Stock Hours here, back with another educational video. I hope you guys are all having a great week so far, and I would say having a great rest of the week, but tomorrow is Good Friday and the market is closed. So today we're going to be talking about different market conditions and how to adapt to each one of these conditions. This is going to ensure that you will be able to position size yourself properly and also take the correct trades throughout each one of these market conditions. So to start us off, we really have three main types of market conditions. We have our bullish market, our bearish market, and our choppy market. You guys are probably familiar with all three of these market conditions already, but how do you identify which one we are currently in? Even if we are in an overall bullish market or an overall bearish market, we will still see that there are choppy days in the market. And these are the days that are going to count the most. The choppy days in the market are generally when traders will see themselves give up large amounts of profit when they really just don't need to. So as far as trading goes, today was actually one of those days. So what did we do different than normal? Today, we actually only waited around and took one trade. Nour took one trade on his own in the morning, and that was an Nvidia trade. And I took my own trade on AMD a little bit later in the day, but I stayed extremely patient and waited for my levels. I didn't look for too many early entries or too far of an early entry, just because I knew overall the day in the market was going to be different than usual. I'm just going to quickly explain a bullish market and a bearish market versus a choppy market. The bullish versus bearish markets are going to be pretty easy to understand, so I really don't have to dive too deep into either one of these specific conditions. If you have a clear bullish market or a clear bearish market, it should make zero difference on your trading. The only market condition that is really going to affect your trading is the choppy market. So that is what we're going to be focusing on talking about. So a bullish market is when we are seeing a constant uptrend in the overall market. A bullish market means that stocks are making new highs after new highs after new highs. Or even if they're not making new highs, they may be having just very good runs of consistent green price action. Flip that to the downside with bearish. Bearish markets are a long-term trend of you seeing a sell-off in the market. So if you see either one of these conditions, it's pretty easy to identify which one you're in. If it's a bullish market, the stocks are generally going to be pushing almost every day. Not saying that you should just buy something off the open and hold it till the end of the day, because that's a little bit reckless. But overall, you will end up seeing that price action is trending towards the upside. Bearish markets, you will see that overall the price action is trending towards the downside. So within the past few weeks and probably the last month or so, we've been seeing a lot of our stocks making new high after new high after new high on the year, which would indicate to me that the market that we're in right now, even though it's not obviously the biggest bull run we've ever seen, right now the market is generally going towards the bullish side of things. Even in conditions like that, you will still end up seeing the market have some choppy days. A lot of these days are going to come around whenever you have big news coming up, whenever you have different holidays coming up, stuff like that. For example, the reason that we stayed very patient today instead of going around and looking for different trades is because tomorrow is Good Friday, so that means one less day of the week in the market in the first place. We also had the release of 5 different pretty significant news this morning. So we had jobless claims and GDP pre-market, and then 15 minutes into market open, we had Chicago PMI, and then after that, we had pending home sales and we had consumer sentiment. So these are all pretty big news releases that are going to affect the market in some way. Generally, on days that have news like consumer sentiment, GDP, jobless claims, anything like that, and especially FOMC, you will see the market be pretty slow up until that news is released. What I would recommend on days like that is to make sure you're sizing back on your position sizing and also staying extremely patient and extremely picky with the trades that you're taking. Some of the just random high of day scalps or low of day scalps that you would be able to get away with on a regular day will not work out for you on days like this. You tend to see a lot less follow through on days that have big news releases. Another thing that goes into this is if the market closes early that day, I will generally try to be away from the market within the first 10 to 15 minutes of market open. The reason for that is because volume is very low on those days compared to usual in the first place, and it drastically drops off throughout the day. And on FOMC days, I personally don't even take any trades in the morning, just because I know that there is a higher probability of us not having any follow through on these trades, because what everybody's doing is waiting for the same thing. They're all waiting for that FOMC news to come out, and once that news comes out, then everybody floods into the market, and you'll usually see a very large spike of volume around that time. Same thing with PMI, consumer sentiment, anything like that. So if you see a day with a lot of news coming up, you can either expect the day before, the day of, or even a couple days before are going to be pretty slow. So what did we do today, and how exactly did we overcome that problem? I personally sized down pretty far on my regular position sizing, and I also stayed extremely patient and waited for a trade that I personally really liked. Did that trade play out exactly how I wanted it to? No, not exactly. But the level that I ended up scalping did not have any continuation to it, but that scalp alone was 18.7%, and that was just within a 1 minute candle. So realistically, that was about a 20 to 25 second trade that ended up being around 18.7% profit. On days like this, I'm not looking for targets that are too far away other than just a scalp, because like I said, the continuation, the follow through, the volume, all of these things are going to be affected when you have specific days that have news or coming up into holidays, either cutting the day short, cutting the market short in the week, anything like that. I will be looking strictly to scalp these levels and not take that extra risk of holding for too long. To summarize this, the best way to determine the market conditions in the day or the following day is to look at your news, look at the holidays around, make sure that first of all, we're having clean price action in the market anyways. And if we're already stuck into a range on ES and NQ, you can probably expect that the market's going to be pretty choppy. If we have a good follow through on ES and NQ where we're actually making moves to one direction or the other, then the day's generally going to be pretty clean. You need to obviously identify what the overall market is looking like, and you also need to identify what the news, what the releases, what the holidays, what the whole week is doing in order to determine, is this going to be a clean day or not? So I talked about my trade. Let's call Nour and see what he had to say about his. What's going on?
Yo, what's going on?
I'm doing a video right now where I'm going over basically how to adapt to different market conditions, and today was kind of one of those days that we expected it to be slow. So yeah, what did you trade today, and how did the chat end up doing on it?
So today we ended up catching Nvidia. Originally we were looking at the downside and the upside, and we ended up thinking it was going to, break the bottom of the range, which was about 890, but ended up catching it at 899. It was about 9 minutes into the market. This pushed all the way up to like 912 and a half, ended up getting out at around 907, and the chat absolutely killed it.
Awesome. So a big question is, if anything, what did you do different to plan for today being a more than likely slower day than usual?
Whenever I wake up, and me and the interns, you guys, and the managers, we wake up and we don't really like whatever is going on. That's like a day where, like, in my mind, it's like I'm gonna sit there and not trade. Like that's my mindset coming into the day. The only way I'll take a trade is if it's an A+ setup or something that actually was prepared the day before. And the only thing that was prepared overnight was the Nvidia range play. And that ended up happening. But let's just say Nvidia didn't end up happening and someone mentioned Tesla throughout the day. I wasn't going to take that trade. But that's
Smart.
how I prepare myself for choppy days. I come in with the mindset of I'm not going to take a trade today unless it's something I prepared for or it's an A+ setup.
What do you usually do differently on days in the market where obviously, you have, let's say we have FOMC or something. Do you come into the same mindset as you're not looking for anything unless you have a quick trade planned? Are you looking to scalp stuff instead of try and hold for targets, or how do you end up playing stuff like that?
It's the same thing as a choppy day. That I consider those days where I'm going to have to deal with chop. The only difference, maybe not even a difference, but another tool for like FOMC and data week, or at least FOMC days, I don't want to be trading after 30 minutes into the market. I want to be gone.
Yeah.
And if that means I can't trade anything in the first 30 minutes, that means, okay, it's time to go.
Okay,
And I'm
cool.
not here to trade at power hour. But if we have data, like for example, we have data today, you obviously have to, write it down and see how important the actual data is. And if it is important data, then it's time to like make sure that you don't have a trade in between that time. Like some people take a trade right before that. And then when the news comes out, you get a whiplash from SPY. And now they get cooked because they had no idea and they weren't prepared for that type of news.
For sure. I said the same exact thing. If you're looking and you see that there's news on that day, usually plan to either be done before the news or be patient and wait until after. So that on FOMC days, I personally don't even take anything at the very beginning and I just wait for FOMC. And if there is anything, then I'll take it. But same thing as you, I'll plan on being cash. So I just wanted to get your opinion on some of that stuff, but I appreciate you taking the time to record this, and we'll get back to the winning streak next Monday.
Yeah, 12-day win streak. So next week we're going for that 13, 14, 15.
Absolutely. And if you guys are watching this right now and you're not in the free chat already, make sure you join on Wednesdays. It's free for everybody. And yeah, take advantage of that.
Take advantage. Thank you, Keith.
No problem. All right. I hope you guys enjoyed this video. I hope this helps you guys out in the future. Like I said, make sure you're always checking your news and make sure you're always paying attention to what the overall market is doing to determine whether you need to be aggressive or defensive in your trading. So I hope you guys have a great rest of the week, and we will see you on the next one. Peace.